No, not talking yet. I'm just getting everything set up. What's going on, everybody? Happy Friday. Thanks for joining me this Friday. Hope you had a good week. I had a good week myself. I spent a lot more time working on my other investments, real estate. I did a epoxy shower refinishing today, so got my hands a little bit dirty. It's very, very hard to find contractors, and so I think every man or woman, if that's the case, but let's face it, entire audience is male, should learn some kind of home improvement skill. And I like working with epoxy. It's really fun. But let's talk about trading. So this week, we're going to do a market recap. Like always, look at a couple of things, a couple of cool news items in crypto. A little update just before we started today on old Sam Bankman-Fried. He is not going to be, he's more like Sam Bankman back in jail, as the case may be. And also Coinbase, which is the tagline I put on here. I'm no love lost for me with Coinbase. I am not a big fan, and part of it is the reason that I don't like them is because I just don't think they're very much in tune with the crypto ethos. And in order to save their skins with the SEC, they have said just as much. But we're going to talk about that. I'll rant a bit about that. Jen says, good week does not equal getting murdered. Well, it really just depends on what you're in. And of course, to start out with, I had Palantir up here as well as Rivian. Those have been two hot things, but you know what? Things burn hot and then they're not. And the hardest part is stepping away from the table. And sometimes you just got to do that. And we can talk about that a little bit. But as always, if you guys have something to look at, post it in the chat, post a symbol in the chat, and I'll give you my opinion on it. Plus, share with me any ideas. That's why I love to do this, because people share with me good stuff, and I'll take a trade. I'll take a position if somebody brings it to my attention, because I can't look at every instrument. And so I really appreciate you guys participating. Links below. I have a Discord. I stream this every Friday on Discord, TradingView, and YouTube. I really like TradingView because that's where all my charts are based on. And yeah, and today also I'm going to kind of continue what I was doing last week. We're going to use a real live trade example for this week in futures. This was on Thursday, yesterday, in the S&P 500 futures, the ES, an example of my TS recap strategy. And I also want to break down the process that I go through in the mornings to find these sort of setups. Not too hard, not using fancy moving, not using many fancy indicators, just keeping it simple. And I want to show you guys how simple it can be for that. And really, it caught basically the little dip that we had over the last few days. So let's go ahead and get into it, because usually I get to talking and I don't get to my lesson piece until late. So I'm going to try to knock things out while we can. Let's start with the news that I wanted to chat about. And the latest coming up today, I just saw this come in right before I started the live stream. Sam Bankman-Fried. I had this, there's a joke. I don't know if it's a joke or not, but apparently, hold on. He apparently, while he's out on bail, he created a coin, and wait, hold on, rug pull. So he created a new coin, and apparently we're able to, find some kind of link between this bald token. He basically, while he's out on bail, created a token and then did a rug pull. In other words, he pulled all the money out of it. Now, maybe it is him or not, but on-chain data shows that the Bald's developer contract has interacted with Alameda-linked wallets and was an active DeFi participant in the early days. So there's a possibility that he could have played a hand in this recent scam while he's out on bail. But whether that's the case or not, he's been contacting people ahead of the trial, and who knows if that's actually witness tampering or not. But apparently he's going back to jail. So RIP. I don't think he really had much fun there. So, oh well, probably shouldn't have done that. The thing that I thought that was pretty funny this week was, Coinbase has been involved in a lawsuit with the SEC. Now, me personally, I'll go ahead and throw it out there. I don't think that crypto should be regulated at all. And that seems to be an unpopular opinion, but I think that the U.S. government collected plenty in tax revenues before 2009. And it's not like crypto is real estate. It's not like crypto is a stock. It's not like crypto is a bond. It is its own thing. And these regulatory agencies are hammering down, trying to assert their authority, because why not? I mean, that is where people are putting their money. That's where they can extract some tax revenue from. I understand why they're doing it. I just don't think it's moral or justified. But, Coinbase was in league philosophically with the ethos of crypto, that it was going to revolutionize finance, that it was going to replace the existing order. But now they're trying to get around this lawsuit by saying that what they've got listed is no different than a collectible, like a beanie baby or American doll or a baseball card, which one could say that is somewhat accurate, maybe overly simplified. But yeah, I guess it is threatening to say that crypto is going to replace the existing order of finance to the existing order of finance. And so they're trying to walk that back a little bit by saying that what they're doing is no different than just a listing service for collectibles. Let's see what we got. On Coinbase second, there is no investment of money coupled with a promise of future delivery of anything. There's an asset sale. That's it. It's akin to a sale of a parcel of land, the value of which may fluctuate after the sale, or a condo, or an American Girl doll, or a Beanie Baby, or a baseball card. So they literally said what they're selling is like Beanie Babies. Well, we'll see if that defense plays out. But I do not have any exposure to Coinbase, nor do I want it. And as a joke, What I say is that when people ask me, what do you think about Coinbase? Usually it's trading at, let's see, what, $90? It's trading at 81.01 right now. My thing that I always say is that it's $81.01 overvalued. That being said, as I look at the chart right here, I would be remiss not to point out that with this, following this June run up, it has pulled back to this 50% level. So on a technical basis, Coinbase is at a level for a trade. It's at a 50% level. If we bring up Ichimoku and we look at it from a trend perspective, it could hold here. There's that flat SKB right there. And so if I was inclined, if I really wanted to play Coinbase, I would structure myself some sort of a trade that looked like this. Basically hit it today, play it back up to the top with a 3-to-1 like such. But you know what? Not a big fan of it. And also this being the daily, that's one time frame to look at it. On the weekly, it still hasn't managed to traverse this cloud, the Ichimoku cloud, which defines the trend. It's still technically in a bearish trend because Coinbase has not managed to get itself out of the cloud yet. Let's jump back real quick to Palantir. Palantir is one where even though it's hit a 50% level at 1756, which is the 50% from the September 21 high to the December 22 low, it is technically, or at least it did technically get out of the cloud along with momentum. So there is still a bullish case, although it's going through a pullback now in Palantir, to be made here on the weekly. And so for those that are still trying to play the dream of Palantir, accept that the run has happened. Okay? This was a nice run. Doesn't last for freaking ever. But just like with Tesla, when it had its big run in January, it stalled out. A lot of people thought that it was just going to go on in a straight line forever. No. Now what you have is around the 14 level on Palantir is a support. 50% support right here, and plus you'll be contained by that daily cloud. So a little bit more to go to come down and find a nice support. Let's go through the rest of the market recap. Again, if you have any questions, happy Friday to everybody too on TradingView. Put them in the chat along with symbols, and I'll get to them. So we'll take a look at that Tartov and K333999. We'll look at those in just a second. All right, so stock market. The stock market has, on average, 3 minus 5% pullbacks in any given year. That's just the average. That's the statistic. Doesn't mean it has to happen. Doesn't mean it'll always happen. It may have more, may have less. But we have only had one 5% or more pullback from high to low this year. That was about an 8% pullback in March. Remember when all the banks were going to fail? Remember when the whole US dollar system was going to fail? Remember all that FUD? Well, that actually, as a learning experience, happened to be the time to buy stocks in 2023 when everyone else was saying that the world was going to finally end as they have been expecting for the last 2 years. Hold on, let me adjust my camera a little bit here. Sorry, guys. Come on. Come down. Okay, I'll try to sit up straight. So we are probably, and I use that word specifically, as in there's a high probability that we are now inside of the second minus 5% pullback on the stock market. And so where are we going to look for this to go? Well, 5% takes us down to about 4,400 on the ES, the S&P 500 futures, which I use. And that works out very nicely to also the cloud, the Ichimoku cloud, where we might be doing a pullback into the cloud to contain that bullish trend, but giving it a nice touch so that we can have a healthy pullback. You don't want stock market to go up, 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 straight up, because then the pullback is going to be very violent. You want to have nice, healthy pullbacks to wash people out so that we can continue further and they can live in angst because they didn't trade it correctly. I mean, that's how it kind of goes. So I'm still looking for it to go down. And so this week had a sort of a bearish bias. And then as we go into next week, I'm going to have a bearish bias as well. I want to see this healthy pullback. I want to see us try to get to about 4,400 S&P 500 or futures ES, 4,400 ES. And that's what I'm looking for as we finish out the summer. Summers are typically not this bullish as we've had. This has been a rather out of the ordinary, improbable summer. But we're getting into this month right here, superstitiously, statistically, August has a little bit of a less. I need to pull up those statistics, those stock market almanacs again, and look at them. But August is typically not a good month, and then October, that's where was it Black Friday? Not Black Friday, but Black Monday, and lots of other critical crashes have happened in October typically. So we're starting to get into the danger zone of the year. But of course, that's going to be followed up by the Santa Claus rally, and who knows? I mean, as we go forward, who knows what we're going to see towards the end of the year? We got a lot of 2023 left, but we're probably going through the second -5% pullback, and we're going to watch that 4,400 level and see if we get to it. NASDAQ is following pretty much the same course. It looks a lot of the same. That's one thing that Ichimoku helps do is normalize things so that we can see where it is contained in the trend. Yeah, there's another good statistic, Tartar, they bring up about election year. There's definitely a cyclicality to election years, to the U.S. political system. So we'll see how that plays in. TLT has not maintained its nice 100 level that I was looking for going into this year. So hopefully for the position, which I just have shares of TLT, we're going to set up a double bottom here. This has to do with interest rates. I think people are assuming that the interest rates aren't going to stop, but apparently we've had the last interest rate hike. By the way, CPI came in this week, and it was slightly better than expected. It was forecasted to be 3.3%. Instead, it came in at 3.2%. So we still have technically, a lot of people doubt this, but we still have 3.3% inflation year over year. Actually, 3.2%. So it's not at the Fed target of 2%, but we'll see how the current interest rate environment affects it going into the next CPI. CPI didn't move the market very much this week, but I think that's because a lot of things have already been priced in. Gold, this is another long-term, still bearish on gold. Looks like it already came back up and held 2,000 again last week, but I've still got GLD short, still playing this down to the 1850 level. We'll see if it kind of breaks through the 1920 when it gets there again, but just kind of letting it go down. Dollar has been very interesting. Dollar has recaptured the 102 level, which is the 50% retracement of the 2021 low to the 2022 high. And so while it did break below it last month in July, we're now back above it. The dollar is actually gaining strength again. That is interesting. Bitcoin still has held that 31,800, let's call it, level, the short level that I called out a few weeks ago. So I'm still looking for a retest of the bottom. I know that might be overly ambitious to some, but that is what, if I was looking at any other chart and it wasn't Bitcoin and we didn't have any emotion about it, it still hit the 50% level from the March 22 high down to the November 22 low, which was also the top of the Ichimoku cloud containing that bearish trend. Bitcoin is still in a bearish trend. We've had a great year, over 100% up, but it hit a resistance, held it very closely, and we talked about this last week. The trading volume has become really kind of the driving factor, and the trading volume has absolutely dried up. Nobody's buying and selling Bitcoin. I think part of that is, we lost the end of an era. I mean, Bitfinex, which technically Americans were not supposed to trade on for many years, they finally implemented KYC, and so you can't trade on Bitfinex unless you submit who you are, and if you're an American, well, then you can't trade on there. And so that era of having what I would consider to be the most reputable exchange where you could do margin trading has come to an end. And so essentially now all you can do is close positions. You can't take new positions. And I don't really, I can't really say I care to try to find another exchange because I could go find some random OCDEX cointrade.com and they would take my money at some point if I allocated a big bunch to it. Um, yeah, it's the end of an era. And so I really want to see how this next halvening cycle plays out with Bitcoin. Everyone assumes that just like let's pull up the chart here. Bitcoin halvening cycle price. See if we can find a chart someone's updated recently. If you go back to my old TradingView posts from 2015, I talked about the halvening cycle. Yeah, as we were in this cycle right here, looking to see what would happen. That's not very up to date. Let's see, where's the most recent one? Yeah, so this was in 2020. I guess no one's really done any update on this. But people, what they've done is they've broken up the halvening cycles into phases to try to predict logically the supply and demand difference of, you know, just a quick recap. Uh, Bitcoin miners, the ones that do the processing of the Bitcoin network, they get rewarded by getting Bitcoin. And every certain number of blocks, every certain number of confirmed blocks through the processing, which happens every few years, their rewards go down by half. So right now, they are getting 6.25 Bitcoin per block as a reward if they solve it. And then it's going to go down to, I guess, 3.125 at somewhere next year, getting close to into 2024. I think maybe April 2024. Not sure about that. It changes, but that's, I think, what they forecasted it to be. But they've tried to cycle it, and so everyone has assumed, you know, what happens when you assume, you make an ass out of you and me, that just like every other halvening cycle, because the supply will go down, that Bitcoin price will get up. And so when I talk in Bitcoin circles, I say, like, hey guys, it hit a resistance, I'm short. They're like, well, why no one should sell their Bitcoin, especially this close to the halvening. Bitcoin always goes up before the halvening and after the halvening. Well, what I said to them was this: nothing concerns me more than a statistic with a 100% success rate. Because you've only got 3 instances of the halvening, there's only been 3 prior to this one, and yes, it's gone up, but is that really a statistically significant event? I've been trading for a decade now, and one of the best trading books, if anyone asks me what book should I read, aside from Reminiscences of a Stock Operator, is Trading in the Zone by Mark Douglas. And the whole TLDR of that book is anything can happen. You really have to lock that into your brain, that anything can happen in the markets, because where people get in trouble is when they assume that something is guaranteed to happen. Because when you assume something's guaranteed to happen, you're going to bet everything on that thing happening because it's a sure thing, right? And then when it doesn't, you get killed. And what I see now, but I'm a contrarian, so I'm going to take stock in what everyone is saying. Everyone in Bitcoin is hodling for the halvening, And it's just too easy. It's just too apparent. It's just too consensus. It's just too automatically assumed to be true in the current zeitgeist of Bitcoin trading and investing for me to not challenge it. And so be careful. Be careful when you read reasons to buy Bitcoin in the coming months, because halvening, everyone is reading that, everyone is believing that. And man, when you've done this as long as I have, when you see everyone doing something, everyone saying something, that makes your ears perk up and be like, oh, really? Everyone thinks that's true, huh? Well, if everyone thinks that's true, then there's actually very little upside if it is true, but there's massive upside the other way if it's untrue. So be very careful with that. Ethereum is even slower. And of course, Monero, my favorite. Again, everything's just kind of dried up. The money printer is not quite going burr as much anymore. Hey, K33999 talked about I use ES futures for SPX, pretty much the same thing. And just a quick recap, I don't know if you heard me or not when I was talking about it, but basically I'm looking for this to be what we're in right now, another 5% pullback. And so if you want to compare that, basically I'm looking for 4350 SPX. I think we're going to pull back to the Ichimoku cloud right here because this is the second pullback that we should have this year of 5% or greater. So that's what I'm looking at. Amazon still, continuing on, Amazon still remains probably the trade of the year, the trade of the century, actually, the trade of the decade at least, because what did it do? It pulled back to its 20-year 50% level back at the end of last year and the beginning of this year, 94.46. That's a good pickup, and it just keeps on going up. It conquered, it defeated. Am I lagging? Okay. No, we're good. So it conquered the 135 level, which was the 50%. Looks like trading view's lagging a little bit today. Let me check my throughput on my OBS is doing pretty good. Okay, maybe it's just trading view right now. So from the high in November 21 down to the low January 23, that level right there, 135, we can see where price came up and tested it before earnings, about a month before earnings, and then broke above it on earnings. And last week, as I said, I would like to see it come back and maybe try to test that level, that former resistance, turn into a support, and then maybe we'll get a bounce off of it to go up. So, and that's all in line with this whole, we're going through a short-term 5% pullback on the stock market. We're getting maybe the last opportunity of 2023 to play stocks into the end of the year. So be very careful. Look at your winners for this year. Look at what they're doing. If they're pulling back to a potential level, these levels are going to be inferior to the levels from earlier this year, the levels that they hit in March. It's just going to be the way it is. It's gone up so much. It's gone. You don't want them to come all the way back to this year, to the start of this year. You just don't. You don't want stocks to come back to March of this year because that's not a good thing. That's not a bull market. But let's go ahead and assume that just like most years, I know there's all kinds of wars going on and inflation and blah, 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 blah. But let's just assume that just like every year that we've been alive and before we've been alive, that stocks only go up. In any given year, we're going to have a bullish year. We're in one now, and we may get possibly the last pullback now to take us into the end of the year and then onward for that. Every year I've been doing this, especially since 2020, when I've been doing live streams and things like that. I'm constantly inundated with people talking about how the market is you just don't understand how bad things are. But I know some boomers, actual baby boomers, I'm not making fun of people, that have been in cash since about 2011. That little crisis in the stock market in 2011, there was one. They went to cash in all their retirement accounts and they have never got back in. Too afraid to. They read too much FUD. And they're missing out. Just take stock of the last few years. We had this pandemic, tanked the market, created great lows, great opportunities. Didn't seem like it at the time because the world was dying, literally, as they said. But that ended up being a great opportunity. And then, we had this big run in 2021. Everyone's like, okay, care to the wind. And then we had this 2022 pullback as we had to have, as we needed. and now we are rising off of it. There's always going to be some reason not to. There's always going to be fear in the market because that's what rises to the top. That's what people share. That's what they put on CNBC to get you to watch it for commercials. Meanwhile, there's opportunity. Find it. Activision Blizzard, it's going up slowly. Got the shares whenever this deal closes. Annoying that it hasn't already. Caterpillar, this is another winner from earlier this year. Had to sit in white knuckle it, but it's maintaining above its high and doing pretty well. EMN, going nowhere. Materials. Kroger, Kroger's coming back up. Looks like we'll start trying to get to this 52 level if we can break these highs, and then we'll see what happens there. MetLife is another just solid freaking 50% from back in May. Going back up. Are we about to hit a resistance yet? Let's see. Do we need to do anything with this position? Well, let's take a look on the daily. Aha, see, it's another one of these examples where price comes up to a resistance level, hesitates, pops above it on earnings, just like Amazon, comes back, and now it's fighting it. It's going to be interesting to see. Do not want Met to get down below this level right here. It's fighting this little, flirting this level, so this is going to be an interesting thing to watch for next week. We've had a bearish week in stocks, but this thing seems to be trying to hold the 63 level. Watch this. NCLH, it's another winner from this year. Ooh, trading view's lagging a little bit. It has come back to the support at 18. I'm thinking I might need to close my remainder here. We might have had a good run here, but it's not wanting to hold up. Got into it back at 12.50, so we're still Gucci, but might want to go ahead and take profit and reallocate somewhere else. Home Depot, this is another 50% level hold. Going okay. Truist, banks had a little bit of FUD this week, but I still think banks are good this year. And Tesla, of course. Tesla is interesting. I have been saying it needs to hold this 260 level, and it has not. And so basically, we need to watch and make sure that we don't go any further. We could get stopped out on Tesla. I took a little small position here to add to my 150. 150 was the level to buy it this year. And so I was looking for it to possibly do that whole support turn, resistance turn support at 260. But if we come down to here, that's a stop out because it's probably going to come back down, and 200 is the next level for it. So Tesla's really teetering on an edge right here. And Rivian, I have been saying for a few weeks, it has hit a 50% level, been flirting with it, and Rivian is probably coming back down to 20, very close to it right now. It's at 50% of basically the leg up. So, all right. If you've got stuff to look at, symbols, post in the chat. I'm going to catch up on things. Also look through my notes because somebody sent me messages this week. Let's see here. Oh, thanks, Jen. Average monthly S&P. Hold on, let me bring this up. Average monthly S&P 500 index returns. August. Yep. I may have read it somewhere before, or I felt it just from doing this. But well, this is from 2018, but I don't guess it's changed very much. But yeah, August is not supposed to be a very good month, and September is the worst month apparently. So that makes sense. That makes sense. I like statistics. There's no guarantee, but it's a really good thing to go on. So be careful going into the next 2 months. We're going through a pullback. We're going through a pullback. And but that also means that there's a good opportunity to take advantage of the last quarter of the year where performance is statistically the best. So hold that capital. Diamond hand that US dollars. Now that's a very unpopular opinion, but look for opportunities and the winners from this year. That's the thing. You want to play winners. And one of the things you should be looking at is not necessarily stocks that have performed the best, but things that have really kind of been resilient this year. Things that, that's why I bring up the ones that I've been looking at, like MetLife, Tesla, Caterpillar. I'm looking at the survivors for this year, the positions I took earlier this year, looking for them to do pullbacks to good levels and add to those positions. Also looking for some new opportunities that I may have not gotten into, but have come to good levels. And so be watching as we go into August, September. These are opportunity times. So just be patient and watch for pullbacks to major 50% levels or spikes. All right, let's see here. Got a couple of things. Tartar wants me to look at a few things. Let's see. BNR, Burning Rock Biotech. This looks gross. I don't like, if I go on the weekly here and I look at the low at October 22, this week it closed below that low. You got earnings coming up. You're basically, I don't have a knife here, but it's like, imagine your hand is right here and then you're trying to catch that falling knife. I would rather play something that has gone up and has pulled back and you have a support. I don't like Coinbase, but I would rather play something like Coinbase than something like that, where you have something that has gone down a lot, like Coinbase did over the last 2 years, and you finally have a little pump up, and then it makes a 50% retracement where you can buy it. I much prefer that over something that looks like this, where you're really just kind of throwing money at it, just hoping that it turns around when you buy it. I want to see some kind of confirmation coming into it. Is that the one? Oh, BNR. Okay. BRN. Okay. Well, my lesson still stands. BRN. Oh, crude oil futures. Oh, oil's bullish. Oil's bullish because you had from the low back in, that craziness of April. This is good to look at because you don't have I usually look at futures, but futures are of course distorted by that below zero pricing. But everything that you look at, whether it's this or CL, and you set the CL at zero, it's all doing sort of the same thing. Where we had a high in February of 2022, it's come back down to the 50% level, and so BRN looks the same way. Again, you're holding that in the case of BRN, that's 77.56, and so it's holding that level. It danced around it, but if this follows the pattern that I look for at 50% levels, which is what I know and trust, then it's over time, maybe a little bit further out than this. You have to assume that it's held that support and it's going up. So bullish oil. Let's see here. ASX. That is, what is on the ASX or, WBT. Okay, on WBT. We're just talking about oil, right? All right. BCHPY. Brain Chip Holdings. That stands to my lesson earlier. You're basically just buying something because you like the stock. I don't see anything technical here. You're basically just, hey, I heard about this. I like its business plan, and you're throwing some money at it and you're hoping it goes up. I'm looking for technical setups. All right, let's see. I'm gonna call you K39 SGMO. Okay, so interesting. Same thing I'm going to say about this. I don't follow fundamentals. I don't read about what drugs are coming out. This is not my bag. This is not what I look for. I look for technical setups. And so when I see something like this, I'm not particularly interested in it because it hasn't done any sort of technical push that I can measure, that I can chart, and I can go off of. And so again, if you're a fundamental trader, go for it. When it makes a little pump, come see me, come bring it to my attention, and I'll mark the pullback level where I will want to buy it. But things like this that just keep on going down, I mean, there's not going to be much I can say about it because I don't know the company from another company. I don't know what the promise is, but Just from looking at this, most people assume it's the future is not good. And so you really have to take a little bit of initiative. You have to take a little bit of risk and say, I think everyone's wrong and I'm going to buy it, but I need my setups for that. You've been hearing about SGMO. I'd be curious where you heard it, why you heard it. You got to understand that, there's probably a lot of people that own this stock and they want you to hear about it. People are saying, the markettear.com, the holy trend channel since March lows. Maybe. Hey, Sarah Trade, what's your strategy for entry at 50%? Sarah, it's very simple. And, as I don't know if you caught me here, but MetLife, MET, is one of the greatest examples this year of one where you had this is like the quintessential example for a lot of stocks. I think Coca-Cola was one too from that's played out over the last few years. Where was it? It's holding this one out here. I'm trying to think. Was it Procter and Gamble? It was the bluest of blue chip stocks did it. Yeah, so that's one where basically the COVID low to the all-time high created a very clear 50% level on MetLife. There's a COVID low, there's the here. And really, it can be just as simple as you want it to be, where you're looking for that 50% level to be the buy entry. All right, so, and if you have a spike at that level, that's the recipe that I really like to see. Home Depot is an example of that, where it pulled back to the 50% that it had been holding for a while, but on the last earnings cycle, which was here, we had a spike. Basically, earnings dipped it down, and then the second day after earnings, it came back up. Let me draw that line again. So I'm looking for that little false breakout, that little spike to happen right at that level, 280.62. And so, that's what I want to see. Those are the best. They don't happen every day. And sometimes you get impatient and you take ones that aren't as perfect as this. But if you wait for these, good stuff, really good stuff. I can really feel good and warm and happy about these because I call them textbook, because I can teach from them. Not only can I make money off of them, but I can teach from them what you're looking for. So false breakouts at major levels. And that's just what you want to see, because you can define your risk very easily from them, because you know that if it breaks that low, that spike low, you don't need to be in it. So you can define your risk very easily and not sit there bag holding. But when it turns around from that point, as it should have a high probability of doing, that's what you want to see, because we don't like to see drawdown, do we? And so the whole idea is that people in this spike have already experienced that drawdown at that level for us, and now we're entering after that drawdown. It's defined itself. I've seen cases where the price closes at the 50% level, the next level. Okay, so as you can see here, the 50% is not going to be necessarily a level that it just runs away from, hits it once. It can hit it multiple times. It's a support, or resistance. That's what we're looking for. And so it can be a few days or weeks at that major 50%, especially if it's a 50% based on multiple years of price action. That's when you go up a time frame and you look for weekly and possibly even monthly closes. In the case of MetLife right here, the first week that it hit it, May the 8th week, held it. The second week, if you would have sat there intra-week, within the days of the week, basically there's if it came in on the Wednesday, May the 31st, it closed below it. And then Thursday, June the 1st, it closed back above it. You're going to have that dance going on, but that's when you got to zoom out to a higher time frame and really understand what level are we playing, and did it really break it or not? And that's what you want. And even pull back to test it again at the last week of May. Did it break out? Yeah, so that basically what it did there the last week of May was it came down, never made a lower low, but it flirted with it again. And so if you're starting to see, where it goes up, and down a little bit from a day to day to day, I see you say that you have a day job, you can't do intraday trading. This works out fine. This is why if you can't do intraday trading, focus on the weekly. All you got to do is come in on the weekend and look at the charts of the things that you want. It's going to make you more patient. Set an order maybe before you go to work on that day or at lunch or something like that, and just zoom out to a higher time frame. I know it doesn't satisfy the impatience of some folks because they want to be actively doing something, but believe it or not, you can spend too much time looking at charts. And so if you have a limited amount of time, just zoom out to a higher time frame, play those weekly and monthly levels, and just see what happens. Don't be worried about the intraday price actions. Thoughts about the Litecoin halvening? Well, the same thing applies as I said about the Bitcoin halving. A lot of people are assuming, and as I said, what happens when you assume, you make an ass out of you and me, that it's going to be a bullish windfall. Don't assume it. Crypto broadly, we can do some charting here, but crypto broadly is still in a bear market. Crypto was born and matured in a zero interest rate environment. We don't have that anymore. You can get 8% on a CD. It's a totally different risk calculus that everyone is making nowadays about crypto. Like, no one's putting their life savings into crypto right now as they did in 2021, mainly because they don't have savings anymore. You need that for it to go up. Because, to be frank, even though my name's Wes or Narok, but to be frank, what drives crypto valuations is money inflows. Crypto doesn't make businesses more efficient. It doesn't help businesses make more goods and services. It doesn't generate wealth itself. What people pay for it, when people drive the price up, that makes crypto go up. That's it. And unless you have people throwing money into it, unless you have institutions throwing money into it, it's not going to go up. And so a lot of people are sitting here right now just holding, wondering, okay, well, I don't want to put any more money into it because it's gone down. It's kind of risky now, even though it's cheaper than when I bought it. I liked it when it was going up. That was nice. I felt really good. I wanted to go up again. And so I asked those people, well, are you buying Litecoin? And a lot of people will answer me, yeah, I'm buying. Yeah, come on. Are you taking $500 out of your weekly or monthly paycheck and putting it into crypto as you might have back in 2 years ago? Are you really? Are you real? Is your friend? Is your grandmother? Is your aunt? Is that guy, in that forum? Probably not. So everyone's sitting here waiting and hoping that somebody else is going to buy their bag. And they're trying to find reasons for why that might be the case outside of people need to buy crypto for it to go up. Like, the halvening is going to do it on its own from supply and demand. Maybe, but be careful. Be careful. I think that crypto is not dead, but crypto winter is probably going to last longer than people think. It's not going to be easy like people hope. It's just not. That's just the way the markets are. So you might have another year or two of crypto winter, and that goes beyond the halvening, which, as I said, a lot more people are asking me questions about, what do you think about the Bitcoin halvening? What do you think about the Litecoin halvening? Everyone's looking at this event as going to be a bullish catalyst to get it back going up again. The fact that everyone's looking at it reminds me of, when everyone was looking at Dogecoin back before Elon went on Saturday Night Live. Everyone was looking at Dogecoin to go up when he promoted it on Saturday Night Live. And it sure did. It went up to that exact moment that he was on Saturday Night Live. And at that point, there was no more bullish catalyst. So that's really, if I was confident in anything, it'd be this. You may see crypto go up into the halvening event. But after that event, there's no more catalyst that people are looking for. And it will tank after that. So if everyone is looking for the halvening to be the bullish catalyst, and you start to see things go up into that date, that moment, you need to sell. Oh, excuse me, hashtag this is not financial advice. I'm not telling people to do anything. But you need to look at history. You need to look at how market psychology operates. You need to look at, in the past, when you have bullish events that people are perceiving, that drives people, the price up, because people are buying it, expectation of that. It's the old adage, buy the rumor, sell the news. In other words, buy when people are saying something's about to happen, but when the event happens, sell it. Happens. This is a saying that goes back 100 years. It predates me. Same thing applies in crypto. You know, a lot of people are looking at the Bitcoin ETF. A lot of people are looking, let me just give you an example. A really, really good, solid example. The date that Bitcoin futures launched was December 10th, 2017. Now, at the time, everyone in Bitcoin was talking about how, oh, there's going to be futures. That means more people are going to be buying Bitcoin. You can now trade futures. That's going to mean Bitcoin goes up. Everyone was looking for that. December 10th, 2017. Everyone was looking for that to be the event that would push Bitcoin higher. What happened on December 10th, 2017? Going back in time. December the 10th, 2017. So, this is the bull run of 2017, where it started all the way down in triple digits of 300 in 2016. And then you had this big epic run in Bitcoin. This is the biggest one yet. And then futures launched on the 10th. Got a little bit of a push. And then it marked basically the high for that cycle. And the rest is history, as they say. So do not assume. I thought it was actually lighter than that. Hold on a second. I thought it was actually closer to the high than that. 1 second. They announced it on December the 1st. Let's see. I believe it was actually December the 17th. Because this was published on December 17th. And I think that is actually when it went off. So the 17th was here, which was the actual high. That article, at least, that announced it was the high itself. So point of this is, when everyone's looking at some event to happen that's going to push the price up, it does push the price up ahead of it, kind of like earnings hype for stocks. But on that event, unless there's something else that's going to push it beyond it, there's nothing left to make it go higher. So be very careful as we go into the halvening and people are looking at that. All right. I like my dad jokes. How do you know when a joke becomes a dad joke? When it becomes apparent. All right, we're coming up into the end of the live stream here. Let me teach my lesson. Let me teach my lesson like I promised. Learning time on the ES. All right, so here's how I want to do this. I want to make us a little okay, I like that. All right. So I want to make a little step by step here. Okay. For trading futures, or just trading anything for that matter. So as we go into this week, let's just pretend like we come into this week on futures. We're going to use the ES from this week. And what we're going to do is we're going to do, we'll call it a title here. So this is a TS recap strategy tutorial. All right. Okay. I have a strategy. I call it a TS recap. TS stands for Tinkinson. It is an element of Ichimoku. That is this red line that you see on my chart. And it is basically the 9-period 50% level for the last 9 bars. So last 9 bars, 50% level. In other words, if we were to measure from the low, we'll count backwards. 1, 2, 3, 4, 5, 6, 7, 8, 9. Boom. We see that that is our red line. And I use that as sort of like a trigger. It's the nearest 50%. It's a little quick hack for me to find 50% levels. And it's also very good for trying to play highs and lows, trying to play reversals. So I use this on charts of any time frame, but definitely when we come into the 1-minute chart when we're day trading. Let me see if that anchored text is going to work. Hold on a second. Let me make this a okay. See if that keeps it on our chart for us a little bit. We may lose that. No. Okay, hold on. Bear with me. Yellow, bold, don't. Okay. Yes, awesome. Okay. So as we come into the week, as you know from my recap earlier, I'm looking for the market as a whole, the S&P 500, to do another minus 5% pullback. And so I'm going to assume that we're bearish coming into this week. And so while I'll take bullish trades, I really want to find myself a bearish trade. So that's what you need, what I mean by sentiment. You kind of know which direction that you want to go. And so you're looking very closely for instances where that might be the case. All right, so let's go into Wednesday. Oh, no. So Wednesday, we knew that the next day, Thursday, we were going to get CPI coming out. So let's go forward into about 8:30, close to 8:30 on Thursday. All right, so we wake up in the morning. And so what we want to do when we get up is we want to mark major levels. Now, the major levels that I look for are major highs and lows and 50% levels. And so what that's going to mean is this. I want to mark off highs and lows to create a range of where price might go to and reverse, because price does like to get to highs and lows, and it likes to sometimes respect them. Doesn't always, but that's the first thing we want to look for. And so as we go into this news event, I've got my levels marked off, and we're going to see what happens. Now, 8:30 comes around, the CPI comes out, and it just goes haywire. By the way, another major level that I'll typically look for is a 50% level. But as you can see, if we drew a 50% of where we're at right now, it doesn't really help. It might have helped us if we were very, so inclined to find this little bounce right here, but that's not the strategy that we're talking about right now. So we're looking for a reversal off of either the high or the low. And I'm going to show you how we get this on the 1 minute. So we want to go on, and market's going to open at 9:30 where it hit that level. And we're going to look as price starts to rise up. We're going to be looking for I'll spell it out, a Tinkinson recapture. That's our TS recap. And what that means is we're going to watch the price in relation to the red line. And what we want to see is price close back below, in a bullish example, this red line. Now, in a strong trend, what's going to happen is it's going to hold that red line. It's not going to go back below it. That's how you know the trend is strong. That's why I use it, because it's a really good container of a strong, strong trend. And so as we come up to this first level that I marked off at about 9:58 in the morning, notice how we don't have any kind of recapturing of that level. So we hit our first high, which was set in the wee hours of Wednesday before, and now we're starting to come up to this next high, which was set on Monday of this week at about 4:42 p.m. after market close. And so now we're still at two good levels, but we never actually got to a recap here. What we want to see is we wanted to see price come down and then recapture that red line and then look to try to take that first short. But we didn't get to that first level. So let's see what happens if we get a TS recap at this second level. Not quite hit the red level. Now we have a close below it. So this is where we want to look for a potential reversal, because we're hitting major highs. We're hitting that major high, that major resistance. And so we want to measure the potential trade out. I look for a 3-to-1 risk reward ratio. So what we're going to do is we're going to look for a reversal, and what it needs to have, a 3-to-1 risk reward, or reward risk, to the 50%. Actually, let's do this. And then 4B, we'll get to that in a second. Stop above the high. All right, so we have our trend that's happened since the open, okay? So we want to draw that up as the 50%, because that's going to create our support where this bullish trend can pull back to. And so we're going to use the trading fee, short position, just like a long position, and we're going to look for the potential 3-to-1 reward risk ratio, and we're going to set the reward at that 50% level, and then we're going to set the stop in a 3-to-1, and then what we need to make sure of is that that stop lets us get it above the high. That's the key, because that sets us up for winning trades if we just follow those rules, because we're going to win not every trade, but as long as we win more than 26%, we're going to make money, because it's a 3-to-1 risk reward ratio. Hopefully we win more than 26%. All right, so the Tinkinson is up there, and we get filled at about 45, 41, let's say 50. All right, we can actually make our stop a little bit higher. Boom. Stop is at 45, 46, 75. Our first target is at 45, 25, 75. And so that's how we're going to look to try to play this as a Tinkinson recapture. We have the close below the red line, the Tinkinson pulls back. And what is the Tinkinson? Remember, it's a little bitty 50% up here. So what we're doing is we're playing like the small 50% as a reversal down to the trend, the larger 50% reversal. And if we have enough room in there to create a three reward, basically a multiple of 3. I think in this case, we're looking for a reward of 15, let's call it 16 points, and a risk, which lets us have a stop above that high of, let's call it 5. That's a really good trade for us to play. Lets us try to get on base in this potential reversal. And so it can take a while. You just kind of let it be. May come back and retest it again, but remember, you've got your stop up here. You don't have to be worried about it. You already agreed that's the risk you're going to take, and you let it play out. Now, ideally what you want to do, and if you can do this with mini contracts, micro, the small ones, you can take multiple contracts. I like to take 2 at least. That way you can take profit when it pulls down to that first level, that 50%. Now you can have a limit order there, or you can kind of wait and see for it to do something like this, and then try to get you a little bit more. But then you want to leave a runner on. The runner, you still took at the same level, the 45, 41. You're just going to sit and wait. And this ended up being a nice reversal off that level, nice and textbook. And let's remember where it started. It started at the high from Monday of this week, and it did this little mini 50%, which is our Tinkinson, down at first to the 50% there. In fact, if you look at it, it hesitated a little bit, broke below it, pulled back, set up as resistance, and down it goes. And then from there, so let's update our strategy here. Yeah, that's our target. And stop above the high. And then 5, ideally take 2 contracts, profit at 50%, 1, and let the next ride. And by that, you just basically keep it on to taste. Keep it on to taste. You can play that low from the open, which is a good solid level. And if you notice, that's where price started to hesitate. So that would have been a really good profit target for our second contract. And really, in most cases, that's going to be what you want from a day trade, especially in this year, this particular market. It likes to bandy around. This, what it did on Thursday, where it continued down. Again, we have another low that we could have possibly played as a potential target, and it kind of hesitated around there, but it just so happened that the market was pretty bearish. So in other words, by about noon, we could have gotten out and been pretty happy with our day. But as it turns out, it tended to go a little bit lower. I would not have expected this much out of this reversal. I would have been content playing the rules, taking it the first target off here, maybe the second target down here, and then maybe keep a little bonus. But here's the deal. We've been trying to, my friends, we like to find what we call the Valhalla contract, the futures contract that we leave on for weeks at a time that just keeps on going. It's very elusive because even though you had a really good Thursday where you were able to capture that reversal, it hasn't really done much since then. That Thursday, CPI was really the catalyst. And as we went into Friday, just like we were talking about with Bitcoin, once the news event has happened, there's nothing really left to push it into the end of this week. We're not at option expiry. That comes next week, I believe. Option expiry is next week. So options expirations are what's going to drive price next week. And things just kind of hang around. Now, you could have held a contract because we're looking for the market to continue down. But it likes to go back and forth. So if you have any questions about these strategies, I have a Discord where I answer any and all questions and like to share and talk about ideas with people. I appreciate you spending your Friday with me. I hope you learned something. Hope you gave you guys something to think about. As always, trade wisely, and we'll see you next week. Have a good weekend. Oh, wait, eBay. Sorry, Jen. eBay. The Tinkinson is plotted as a function of the Ichimoku indicator set indices. What you'll see is if I have Ichimoku on here, I'll sometimes take it off and I have like a separate indicator that shows me just the red line, but it's a part of Ichimoku. There's a lot of lines in Ichimoku. They're all useful to some extent, but I like to keep things simple. I spent many years studying and trading Ichimoku. That's why you'll see me kind of take it off and on, but I like to keep things very simple in trading. The longer you trade, there's a curve. It's kind of like the Dunning-Kruger effect of trading, the number of indicators on your chart. You'll start with maybe 1 or 2, and then in your first year, by the end of the year, you'll have about 20 indicators. And then after you've traded for many years, you get back down to 2. So, all right, eBay. Well, okay, this is interesting. Yeah. You've got a from 2009 bottom to 2021 high, holding 42.68. I like it. I like it. That's worth it because you know where your stop needs to be. Now, this is a monthly chart, so we can't be taking weekly options to play this. We might have to do shares. I don't even think leaps would work with this because, you know, if we look at it in context, you know, from here to here, like I don't think you're going to get very much out of that. But a nice 3-to-1 off that 50%. Yeah, that's possible. Notice I'm using this as the target. Let's call it 68.79. So you entered from daily in July. You have 37.5 calls. Wait, so you bought in the money calls? Well, talk to me about it. I'm going to sign off again. Thank you guys for joining me. If you have questions, hop on my Discord. If you want any of these indicators, very simple, the spikes as well as 50%, send me a message on TradingView or Discord. I will add you to it. The retracement levels, which draw at 50%, that's free. Just do a search for retracement levels. Have a good weekend. Trade wisely. We'll see you guys next week. Bye-bye.